Today we're going to start looking at the 6-column worksheet and understand a little bit more about why we use the 6-column worksheet and what items are included in the 6-item worksheet. The 6-column worksheet. So what you see here is an example of a 6-column worksheet, or at least the start of it, for Roadrunner Delivery Company, which is the company that we've been using as an example throughout the first quarter of this course. So you'll notice that the trial balance has been added into this worksheet already. But what I first want to point out to you are the 5 sections of this 6-column worksheet. So what we have first are the 3 columns up, or the 3 rows up top. We have, this is called our 3-row heading. It includes the name of our company, what we're looking at, which is our worksheet, and the accounting period that we're looking at. So, for example, this accounting period is for the month ending October 31st, 2013. So this is kind of like part 1 of our section 1 of our 6-column worksheet. Section 2 includes our account numbers and account names. And you'll notice that these are in order: assets, then liabilities, then owner's equity. We've got our revenue, then our expenses. And each of the accounts that are listed in our chart of accounts are included on this trial balance, or on this section of our worksheet. So this is section 2, the account number and account name. Section 3 is our trial balance, and it includes a debit column and a credit column. Section 4 is our income statement column, which includes a debit and a credit column. And also then the last section is the balance sheet section, which includes a debit and a credit column as well. The whole purpose of this worksheet is to start to compile information that is going to be included in the financial statements that we're going to prepare later. So typically, the work that you have been doing, the tedious stuff that some of you haven't really enjoyed, that's usually done by a company's bookkeeper. Now, the financial statements are done by a certified public accountant, okay? So this gets a little bit more high level. This stuff is written for the investors as opposed to the managers within the company. So let's get started here. As you notice, we've got our trial balance filled in. We have done the trial balance a couple of different times. You know how to do the trial balance. Any asset account or anything that has a normal debit balance, we put our ending balance here on the debit side. Anything that has a normal credit balance, we put our ending ledger balances in the credit column. And the whole goal of our trial balance is that these 2 columns, both the debit column and the credit column, are going to be equal. And if they're not, we have problems, right? And we have to go solve those problems. Now, the 2 new columns that you're going to see, or the 2 new sections, are the income statement and the balance sheet. Now, there are certain items that are included on the balance sheet and certain items that are included on the income statement. What's included? I'm going to skip over to the balance sheet first. The items that are going to be included on your balance sheet are going to be your assets, your liabilities, and your owner's equity. So we have everything from the 100s to the 200s to the 300s, okay? And basically, all we're going to do is we're going to copy the debit and the credit column from that section, and we're going to paste it over on the balance sheet, okay? So we are only going to look at our permanent accounts, our asset accounts, our liability accounts, and our owner's equity, okay? And our owner's equity does include withdrawals. Now, for our income statement, we are going to take our temporary accounts, or our revenue, and our expenses. So we are going to take the 400 and the 500 numbered accounts, and we are literally going to copy and paste them over in our income statement, okay? Now, we need to figure out what the totals are for these rows, right? Now, do you think they're going to come out equal? Well, let's find out, okay? So if we add up, and I'm just going to use a formula, okay? And I'm going to use this same formula that I used over here, the sum of H7 to H22. And I'm going to use something similar over here. Now I am in column J, so I'm going to do equal sign, sum, open parentheses, and I'm going to add these 4 together, okay? That way, if any of these change, if I notice that there is an error, it will automatically change this number. So right now, I have $1,500 worth of expenses. These are my 4 expense accounts, and I have $1,500 worth of expenses. Okay? I am going to take this amount up here, this $2,650, and I'm going to bring it down here. Okay? Now, these do not equal each other, but I'm not overly concerned about that just yet. I'm going to do the same over here. I'm going to do equal sign sum, and I'm going to grab everything that shows up in this column. Okay? And I come out to $38,275. Okay? And I'm going to take the same formula, and I'm going to apply it here. Formulas are so easy because it allows you to not really think about a whole lot here. Okay? Now, we notice that our income statement and our balance sheet, and I'm just going to add a line down here at the bottom. You'll notice that our income statement and our balance sheet, the debits and the credits do not equal. But that's not to be too concerning just yet. So now what we want to do, we're going to focus on our income statement section. And we're going to try and find out, do we have a net income or do we have a net loss? Okay? Now, net income basically tells us the amount of revenue that we've received after all of our expenses are subtracted or after all of our expenses are paid. So what we're going to do is we are going to skip a line down here. After our utilities expense, let's skip a line and let's put in net income. Okay? And we're going to be looking at what our net income is for this accounting period, which is the month ending October 31st. Okay? We are going to enter our net income into the debit side or the debit column of that income statement section. Okay? So in order to find what net income is, we're going to take our revenue minus our expenses. Okay? So I'm going to do a simple formula in here. I love formulas. Okay? I'm going to do the equal sign, and I'm going to click on my revenue minus my expenses. Okay? So what I came up with is that I have $1,150 worth of net income, right? My revenue is greater than my expenses. Okay? If my expenses were greater than my revenue, I would have a net loss, and my net loss would be in the credit column of my income statement. But since I made money, I have net income, we're going to put that in the debit section. Okay? Now, we are going to take this same amount, and we are going to put it in the credit column of our balance sheet. And I'm going to tell you why in just a second. But I'm going to use a formula, equal sign, just click on the cell and hit enter. Okay? So you've noticed I've got net income that's highlighted right here in the debit section of my income statement. And I've also got net income over here in my credit side of my balance sheet. Now, why do I put it on my balance sheet? Let me tell you why. I'm going to click over here to my second tab, and I'm going to look at the effects of net income or net loss on capital. Basically, we said that net income is revenue minus our expenses. Okay? Revenue and expenses are typically temporary accounts, right? During the month, we consider them to be temporary. Well, at the end of an accounting cycle, we transfer those over to our capital. Okay? So our net income is increasing our claim in the business. So we are increasing our capital. Since our revenue is greater than our expenses and we have net income, it's increasing our capital. Now, if we would have had a net loss, which would have meant that our revenue is less than our expenses, it would decrease our capital. Okay? Since we know that our capital is increased on the credit side, that is why we enter our net income on the credit side. Because our owner's equity or our capital account is increasing because we have more income. Okay? Now, all we need to do now is we need to double check our accuracy and we need to total up our columns. Okay, so we're going to add another line below these columns. I'm going to do this up at the top here. And basically, all I'm going to do is I'm going to total my columns. So here again, I'm going to do equal sign sum. I'm going to grab everything below the line ahead, and I've got 2650. And what do you notice? That's our total up here in the credit column. So again, I'm just going to bring that number down, and we've got items that equal each other, right? Now let's try it over here on the balance sheet. If we take the sum of these two columns here, we've got 26,550, which does not equal what we have here. So we've got to go back and we've got to figure out, what's our problem here, okay? And it looks like, if you look at this amount here, it looks like all I did was I took the sum of cell P15, which is this cell here, okay? So I want to take this formula right here and I want to correct it. I want to do the sum of all three of these columns together, okay? So all I did was I changed that formula, and what do you know? It comes out to 38,275 down here because I had my formula and I changed this cell plus this cell, it automatically changed for me, okay? So now what I'm going to do is just bring down this number here, and we've got two columns, our debit and our credit column, that now equal each other, okay? So what we have done is we have used our trial balance, which we had already had before. Instead of having it on its own spreadsheet or its own section, we just added it into this 6-column worksheet. And what we did was we extended, or we transferred, our assets, liabilities, and owner's equity over to our balance sheet. Okay? Literally, it's a copy and paste. We're just extending those numbers over. And remember, these are our permanent accounts. So when you think of balance sheet, think of permanent accounts. Okay? And what we did was we took our 400 and 500 numbered accounts, which are our revenue and our expenses, and we moved those over to our income statement. Okay? And when you think of income, you got to think of revenue minus expenses. And all we did was we transferred these over to the income statement section. Okay? So when you think of income statement, I want you to think of temporary accounts, or our revenue and our expenses. Okay? In order to get our net income, we simply took our revenue and we subtracted our expense accounts. Okay? Since we have more revenue than we do expenses, we have a net income. Remember, if it were the opposite, and if our expenses were greater than our revenue, we would have a net loss, and we would need to put that in our credit column. But let's be happy that we've got some income here. Remember, that net income gets transferred over to our owner's equity account, okay? And since we need to increase our owner's equity, we are placing it in the credit column of our balance sheet. Once we have our net income on our income statement and on our balance sheet, you'll notice that we balance out our two columns, our debit column and our credit column. So what I want you to do now is I want you to take the numbers that you have from your mini project, and I want you to create a 6-column worksheet for your mini project for Canyon.com. Good luck.